Guys, I'm Steve. Welcome back to the channel where we talk about the joys of stock market investing and all things dividend gain. If it's your first time stopping by the channel, hit the subscribe button. Trust me, you won't regret it. And if you're a returning subscriber, welcome back. Guys, this is going to be a big week. Now, not a big week per se as far as earnings reports go, with some of the major stocks that we talk about, but it's going to be a big week in two things we know for sure. The Fed is going to continue to raise rates, right? And also, the stock market will still be in turmoil. Barring some unforeseen circumstance, we may get a couple of upticks, green days, but most likely you can expect times of the past where the market might start off strong the first couple of hours and then run back red. But regardless of that, I'm very excited. The reason why I'm excited is because as the market falls, it's not a bad thing if you're a long-term dividend investor like myself and others out there. Bargains are going to fall in your lap. Now, while these bargains are falling in your lap, what you want to do is, I got a little checklist of some things I was thinking about that I want to share with you guys. Some of it's common knowledge, but a lot of it is for, some of you people that haven't heard of it, or just to spark your interest or trigger something in your mind and say, you know what, let me get up, make this week the week, right? So first thing I want to do is, I want to talk about having a wish list. Make sure you have a wish list. If you have a wish list, make sure you're monitoring it. The favorite stocks that you want to do, you want to invest in, you should have a list of them posted somewhere, either on your phone, in your investment account, if you invest mobilely with Robinhood or something like that. I invest with Ameritrade. I have a watch list. I get alerts. They come as text messages when something falls down around the time I want to do a strike price and buy in. So that's very helpful because, we all have our everyday daily lives to go through, and nobody doesn't have a lot of time to watch the market consistently. So make sure you have your wish list. Now, another thing is to get your portfolio in order. A lot of people should talk to you about that. Get your portfolio in order. A lot of stocks, you might have a lot of security or a lot of shares in a lot of stocks. You might want to move them around, to make way for some of the stocks, getting some of the stocks that you want, especially if you have a lot of growth stocks and you made some significant gains off of them. You might want to redirect some of that money, not take it out of the market, but cash in a little bit of that and then redirect it somewhere else, especially if you find value in some of these stocks. Now, speaking of these stocks, quality blue chip stocks, that's what you want to be looking for, right? You want to be looking for companies with good management teams, good numbers, companies that are going to, you want to buy businesses that are not going anywhere anytime soon at all. When I say going anywhere anytime soon, I'm talking about companies that are not going to go out of business or attached to companies, they're attached to items that can be replaced by another competitor. You want to deal with things that will be needed. Companies like Procter & Gamble, Clorox, cleaning supply companies, a lot of retail that a lot of people rely on. Companies like Walmart, keep an eye on those type of companies because they'll be coming down. When the market falls, it doesn't have any type of sector in mind. Once this thing really starts rolling, and it started rolling now, because the Fed said they're going to be aggressive, they're going to be raising rates. As they raise the rates, the stock prices are going to come down. So all the stocks will be affected. But the thing is, you don't know which time these stocks are going to fall, if they do fall to a price that you're waiting for. So what do? You dollar cost average. Find a stock you want, buy a couple of shares. Hell, buy one share, and then monitor that stock. You're buying businesses, not ticker symbols. It's one of those things. Big thing. Invest for loss. And that goes along with what I just said. You might be like, Steve, what do you mean invest for loss? What I mean when I say invest for loss, buy a stock, a certain amount of shares with the intent of them going down, losing money on those stocks. When I say losing money, you don't lose money unless you sell the stock, but taking a hit because as the market goes in the red, no matter what you buy today, tomorrow, Friday, or whatever, most likely it's going to keep going down because we're trying to get the economy straight. So that's normal. I mean, on times when we were in bull markets, I would buy a stock and it would go red the same day, and I'm like, what is this? But things you learn over time. Just normal. It's all it is certain people are trading the stock, selling it. More people are selling it than buying it that day. Doesn't mean anything. But right now, while the market is going sell crazy, you need to be buying. When you see people running from the village screaming, that's when you run in there and grab the value and opportunity that presents itself. Keep watch company earnings. And this is the big thing, people. You got to keep watch of company earnings. If you have a stock that you're interested in, or you buy stock, you're going to have a lot of companies, no matter what stock you buy, having bad earnings because of the situation. Businesses are not going to be spending money like they were before because the interest rates are high. It's going to have a profound effect on the economy, money spending, everything. So expect that. So you're going to see a lot of big name companies having bad earnings calls. But if you understand the situation and what's going on in the economy and the world economy right now, it's a no-brainer. You understand what's going on. As long as you understand what's going on and the problem can be rectified, it's still a good pick. And another thing, going back to picking these stocks, pick the stocks you feel comfortable with, not what you hear somebody say on TV, not what you hear somebody else telling you, hey, you got to buy this stock. Etiquette wise, you should never listen to somebody telling you about a stock, telling you to buy a stock. Now telling you to buy stocks, I understand, but a specific stock, their vision is their vision. They can't make that. It's like, somebody try to put their opinion on you. You always have to be conscious of that. If you're not feeling the stock or you're not feeling the concept of what the business is, don't invest in it. Another thing is this: when you invest in stocks or any company, remember, you're buying a company. You're buying into a company. If you had millions of dollars to buy into this company, instead of buying small, significant shares, ask yourself, is this company still worth me investing in and getting some type of return back via a dividend? That's serious. You gotta ask yourself that. Know what you bought. Know what companies you bought and why you bought that stock. And that is very significant, people. Because if you don't know why you bought a stock, it makes it that much easier to get rid of. I'm earlier in my investing career, and I'm sure almost everybody has went through this. And if you have, leave me a comment and let me know. Early in your investment, journey, have you made the same mistake I'm about to state? You buy a stock because you heard somebody else hear it or something, and you forget what the ticker symbol is. And as all the stocks are taking off, you're looking at this ticker symbol like, what is this? And you wind up selling it off because it made a little bit of money, or you forgot what it was, and you're too lazy to go and look at it because you're making gains and you got euphoria because your portfolio is going up over here from these stocks, and you wind up selling the stock. You don't want to be that person. So be sure you know what you're investing, why you're investing, and have some excitement about what you invested in. Somebody buys you to go get something, you had the excitement they had, but it's temporarily because they own your presence. And then when they leave and you make this decision, it knocks you off your journey a little bit because you didn't have the enthusiasm they had. So it's just one of those things. Like I said, watch the earnings report. You might want to consolidate your portfolio. Keep track of the stocks that you want, and only invest in what you want to invest. And know why you brought it and what your mission is long term with it. Going to be a lot of stocks, guys. Apple's falling, right? And even if you're not even in the dividend stocks, if you're in the growth stocks, there are going to be a lot of growth stocks falling. I mean, growth stocks are falling now. Growth stocks, the first thing that start going when the economy and stuff go bad because out of fear, people start selling their growth stocks first. So there are opportunities out there this week. They're having earnings calls. I didn't see any of, from my short research, but I know it's like close to 100 companies that are going to be reporting earnings this week. And Their value is all over the place. Don't let nobody tell you, what's going on. Because once these people report their the stocks that they brought and stuff, by the time that comes out in public, it didn't happen 2 months ago. So do what's right for you. You know, if I can talk to one person that can understand what I'm saying and get something out of this video was worth it. You know, I can get on here all day and be like, hey, you know, buy these stocks, 5 stocks, 10 stocks, and it's not a knock against anybody. You know what I mean? But I mean, unless you're getting some type of education from this along with your entertainment, it's not really worth me doing. But yeah, man, look for something that has a decent dividend, quality blue chip stocks, stuff that's not going to go out of business anytime soon. Good companies that we rely on. Watch the earning reports and enjoy yourself, because opportunities like this, a lot of people are saying this is a once in a lifetime event. I don't know, but I mean, numbers are down like they were pre pandemic. So if you missed out then, here's your chance. And it might go below this. Another thing, ETFs. Make sure you guys are investing in that VOO, that SPY, that S&P 500 ETF is serious, people. And if you want to see your portfolio really take off and you just have stocks and you're interested in an ETF, take a look at Vanguard ETFs. They got some really good ETFs, especially with certain sectors that can really give your portfolio a boost. But I just want to chime in a little bit as usual, give you guys some motivation for the upcoming week and the things going forward in the market, the turbulence. Hold on tight. It's going to be a bumpy ride, but you can do it. Set it, forget it, like they tell you. And all of the experts will tell you, set it and forget it. Ignore the talking heads unless they say something worth listening to. Remember, it's your money, your life, and everything else. Your retirement and your goal and your path, your road to financial freedom. So grab the reins, the gun has sounded, you're in the race, take off, and always move forward. As always, like, comment, share, subscribe, and I'll see you guys in the next video. Thanks for spending time with me. Take care.